Liwanag. Pasensya na kayo kung ganyan na lang siya. Kasi nakadok, ano siya hindi ko na mapalaki. Ay, ano ba yan? Oh, sige, wala na. Yan na yun talaga. Hindi ko na mapalaki. Ba't tayo siya lumaki? Ito pala dapat. Ulit. Sandali Dapat Google Drive. Yun. Okay, so I sent the PowerPoint. No, sorry for not meeting you last time. Kasi supposedly I should be meeting you last time talaga, Thursday. But the PowerPoint was made available only last Sunday evening. No, hindi ko pa nakita kagad. No, the PowerPoint given to me was given last Sunday evening. Pero hindi yun ang ginamit ko. No, ginamit ko pa rin yung PowerPoint presentations ko. Kasi medyo may mga tama naman, but that is a group. But I will send that PowerPoint also. Kasi that is a group or faculty presentation kumbaga. But I opted to do my own PowerPoint presentations. But this one came, actually yung original came from Brigham. Then I did a little tweaking, no? To make it more understandable to the students. Kasi nung ginawa ito, medyo may mga hindi consistent, no? Especially on the examples. So I changed some of the examples to make it more understandable and consistent. Para dire-diretso talaga, no? So, but I will send also the one did by the faculty members. Yung parang napag-agreean namin na ano, kasi hindi ko pinakita sa kanila to eh. Kasi toka-toka kami, tapos it will represent the entire faculty teaching this subject. Pero sabi ko, I opted to do my own. Okay, but I will send that also if you want. Okay, so next, punta tayo dito, no? So capital. So let's define first what is capital being talked here in capital structure and leverage. So pagka sinabi natin capital, it refers to investor-supplied funds, no? So we have the debt, the preferred stock, common stock, and retained earnings. So when you say debt, this refers to the total liabilities except for the non-interest bearing liabilities. So meaning yung total debt dito ay notes payable kahit na short term siya, and then of course the long term liabilities. No? So yung accounts payable and accruals, they are not included because they are not provided by investors. So they are provided by whom? By the suppliers, at saka due to the taxing authorities of the government. Okay, so yung capital structure natin is defined as the percentage of each type of investor supplied capital with the total being 100%. So ibig sabihin nun, kung itong mga debt natin na to, debt, preferred stock, common stock, retained earnings, kukunin natin yung percentages nila, and that comprises the 100%. So that is of course excluding, no, the accounts payable and accruals. So out sa picture yung accounts payable and accruals, and still these supplied funds by the investors should equal to 100%. Maliwanag ba? Okay, so optimal capital structure. So this is the mix of debt, preferred stocks, and common equity that maximizes the stock's intrinsic value. So ibig sabihin po dahil kung mix yan ng debt, preferred stocks, and common stock equity, ito yung tinatawag nating WACC. Diba yung weighted average cost of capital. Pero you already took cost of capital in your financial management. Tama ba? Tama ba? Rich Ann, tama ba ako? Rich Ann.
Yes, sir.
Diba na-take up natin yan? Rich Ann, ano?
Apa.
Okay, so yan pala yung WACC. But of course, yung optimum capital structure, we did not study that under financial management dun sa cost of capital. We only computed the WACC. But the WACC plays a big role, no, in getting the to maximize the price of the stock. Because to give a shortcut, no, for the idea on this is that the minimum or the least WACC is the one that maximizes the price of the stock. So take note that the least WACC or the minimum or the lowest WACC is the one that give us the maximum price of the stock. Okay? Not maximum pala, but the highest, no? Hindi maximum, but the highest price of the stock. Okay, so example natin ito. So, di ba sa pag-compute ng WACC, we are using book value or market value. So, of course, yung target value is different, no? Kasi target value na, papasok na siya sa capital structure. But we are using either the book value or the market value. Ano tingin nyo mas tama rito? Market value or book value? Tatanungin ko naman gusto ko tanungin si Matthew kasi lagi ako tinatanong nito si Matthew. Natatakot ako nagtatanong kay Matthew. Ay, si Matthew, natatakot ako pagka nagtatanong ito. O Matthew, ikaw naman, tatanungin ka. Which one is better? Book value or the market value in getting the WACC?
For me po, it would be the market value kung yung dalawa lang po yung i-consider.
Bakit market value kaya, Matthew?
Kasi po nire-reflect na po yung market price po talaga ng mga components po of the capital structure.
Okay, so okay. Tama naman, no? Kasi book value is based on historical cost, no? And it is based on the performance of the company. Pero you are not considering the outlook or the perception made by the investors. Tama? So tingnan natin sino kaya to? Si Justin, hindi ko pa naririnig sumagot eh. Naging estudyante ko nito si Justin eh. Justin.
Yes po, sir.
Justin, ikaw, tingin mo anong tama dyan? Market value or book value?
Sir, it depends po.
It
Kasi
depends.
minsan po yung, pero in rare cases po siguro yung book value already reflects the market value. Then pwede rin naman po yung book value. Pero in general po talaga, market value because it clearly reflects yung mga lahat ng circumstances, not just internally but also externally.
Okay. So internally, actually, wala nang internal dyan. Paano external yan? Kasi market value yan eh. Diba? Although the assumption here is that if you have notes payable and long-term debt, you cannot actually get the market value. Kasi yun na rin yung market value. Kung ano yung book value, yun na rin yung market value. Hindi naman pwede pagka nanghiram ka, no? Magbabago yung amount. Unless that is a foreign exchange, foreign currencies. Magbabago yan. But in general, if you're borrowing, let's say, in peso, hindi magbabago yan. No? Yun pa rin ang market value niya. Unlike for the common stocks, magbabago yan because there is a price for the stock, di ba, in the market. And then we're including the retained earnings to the common stock being part of the equity. So yan, tignan natin tatanong pa ako ng isa. So parehong parang lalaki, so babae naman ngayon. Justin, tumawag ka ng babae. Justin?
Po, sir.
Tawag ka ng babae.
Si ano po,
Yung kaaway mo para makaganti ka. Joke lang yun, ha? Joke. Sige.
si Maru na lang po.
Si?
Maru po.
Maru. Maru, nasaan ka, Maru?
Good morning po, sir.
Good morning, Maru. Naging student ba kita dati, Maru?
Hindi pa po.
Sige, Maru. Okay. The same question. Market value or book value tingin mo?
Sir, tingin ko po, book value. Kasi sir, based on sa naaalala ko po, pag titingnan po natin ang intrinsic value ng isang company, sir. Independent po dapat ng market value. Kasi po, ano siya, perceptional lang po siya na value. O yung true value lang po siya ng company.
So, book value sa'yo. Ha? Sige. So, ito yung akin naman. Ha? So, actually, in the book of Brigham, he was telling market value. No? He was telling the market value. But in other books that I read, and also my opinion, no, regardless whether market value or the book value, it doesn't matter. Kasi both are acceptable. That is based on my readings and based on my own idea. Sinasabi ko, ha? But in the book of Brigham, he's saying that market value is better measure of WACC than the book value. Bakit sinabi niya yon? Kasi that reflects the market value of the company or the recent prices of the company. But the problem with that is, no, the market value is volatile. No, kasi we're referring to the price of the stock. Di ba sa stock market nga, in a minute lang, nagbabago yung price. No? Kapon nga, tulad kapon, no? May stock ako, no? PLDT. Pero mo naglalaro siya sa 1,395 to 1,404, no, which is higher than the price yesterday. Yes, last day pala. Alam mo ba? No, pumunta lang ako ng ref to drink water. Pagbalik ko, you know what is the price? 1,375. Nung nag-close. Samantalang all throughout from 9:30 to 12:30, no, at 12:45, the price of the stock was playing around 1,395 to 1,404. Then suddenly, at 12:45, nagkaroon siya ng rerun or run for the closing at 12:50 yata, 12:50, the price went down to 1,375. Ganun ka volatile. Ngayon, kung volatile ang market na ganun, kailangan ba maging volatile din ang WACC natin? Because definitely that will change the WACC. Kasi we're talking of the price of the stock. And we're talking of the price of the stock, that will change the value of the equity. Tama ba ako? Tama ba? Hoy, sumagot kayo. Tama
Yes
ba ako?
po.
Okay, tama. Diba? Tama ako ron. Ha? So, kung ganun pala, every now and then we have to change the WACC. Kasi we always have to change the capital structure. Kasi tingnan yung capital structure dito. Di ba laging 100%? At tingnan nyo yung value ng book value at ng market value. They are different. Because the book value, fixed yan lalabas. The same lang. But the market value, this will always change. E di kung nagbabago yan, magbabago rin yung WACC natin. So the reason why many analysts, no, in reality, are using the book value. But the disadvantage of the book value is that you're not showing the real value of the company as perceived by the people or by the investor. Kaya sabi nila, kung ano man yung available, okay lang na gamitin. And besides, the market value is not always available. Sinasabi nila yon, is not always available. Especially if the company is not listed in the stock market. Listed ba lahat ng company sa stock market? Ha? Listed ba?
Hindi po.
Hindi. So, how can you compute for the market value if it is not listed? Kung hindi mo kukuha yon, hindi mo rin magagawa yung WACC. So, the reason why they are using more on the book value. Ha? So, ganun. But, wala akong sinasabi na kung ano mas tama. But, yun nga, they have their own advantages and they have their own disadvantages. Okay? So, clear tayo ron, ha? Okay, so for the capital structure, tignan nyo. So the capital structure always affects the WACC. So this time we have the book value and then we have the market value. So yung yung market value ng notes payable and long-term debt, they are always the same. Kasi nga, hindi naman pwede magbago yung long-term debt mo at saka notes payable, no? But the common stocks at saka retained earnings for the book value, it has a total of 20.9. But these two are combined, no, for the market value. But since the price of the stock is always changing, so therefore, the total equity will change. No? So, kung i-add natin yung total debt at saka yung total equity, let's say for book value, we have 47.7 at saka 20.9. So, the total is 68.6. No? Ang components na 70 and 30%, making it 100%. Eh, di ba, sinabi nga natin kanina, 100% dapat, di ba? No, for the market value of 47.7 at saka 57.9. So for a total of 105.6. So ang components, 45 and 55. But you have a target value of 50 and 50. So look at the computation for the WACC. Tingnan nyo sa baba. Nakikita ba? Nababasa ba?
5.75 po, sir.
Oo, nababasa, no? Ayan.
Opo.
So that's how you compute for the WACC. But you have to consider the information given on the left side. So meron tayong tax rate na 30%, target structure na 50-50, no? Pero dito sa book value and market value, magkaiba yan, syempre, no? But the average interest rate na 5%, which is the cost of debt before tax, is 5% kasi iba yung cost of debt before and after tax, and we should be using the after tax. And then we have the cost of equity of 11%. Okay, so on the right side, we have the formula for the WACC. So you have the weight for the debt, then you get the after tax, plus the weight of the equity times the cost of capital for the equity, no? So nagkabaliktad lang to, class, ha? So we have the interest rate of 0.05 times may weight tayo na 0.70, and then you compute that by 1 minus 0.30. And then you add the weight for the stock of 0.30 and the cost of capital of 11, no, 0.11. So the total now is 5.75%. So makikita mo, book value, ang WACC niya ay 5.75%. And if you do the same computation for market value, you should get 7.63% and target value of 7.25%. So actually, dito lumalabas ang pinakamababang WACC pala ay 5.75%. Then that should be the one that gives us the highest price of the stock. No? Pero mamaya ipoprove natin yan, ha? Kasi yun yung ginawa ko, binago ko yung presentation ng yung material ng faculty as a whole. Tapos pinakita ko yung step by step, no? Para mas maintindihan. But I will send that to you also, no? Para additional material na lang sa inyo. Okay, so naintindihan to, class? Naintindihan ba? Yes or no? Please answer.
Yes po, sir.
Okay, so thank you. So ito yung si capital structure pa rin, no? So in capital structure, there is the capital structure changes over time, no? And then the capital structure, no, once changes over time, the main reason for the changes, basically there are two, no, reasons. One is the deliberate actions. That is if you want to issue new debt, okay, issue new equity, or changing the dividend payout. Kasi pagka pinalitan mo rin yung dividend payout, magmabago yung retained earnings mo. Di ba? And then the other one is the market actions. So that is the change in the price of the stock. One example lang, ha? May example lang yan. So others study the situation, make a conclusion, and then set a target capital structure. So they are studying the mixture of debt and equity. Kasi yung capital structure, walang standard. Now, for different companies, different industries, they have their own capital structure. All you have to do is to find out, no, that capital structure. Now, if that is significant, if that ratio is significantly high in relation to the target level, the firm will issue equity. No? Kasi kung mataas na siya, so natural, padami mo na lang equity so that the debt ratio will go down. And if the debt ratio is significantly low in relation to target level, we'll issue debt. So, syempre, pataasin mo naman yung yung debt ratio so that yung numerator mo tataas, no? So ganon. Next. Okay, so we have this setting capital structure involves trade-off between risk and return. So number one, more debt means higher risk to stockholders and tends to lower the stock price. Okay, bakit ganon? And actually sa study, no, a study made by Modigliani and Miller, ang sinasabi nga niya, ang optimum capital structure is actually 100% liability and then 0% equity. No, but the problem with that theory is that as you increases your liability, no, your credit standing also decreases. Ha? Habang tumataas yung liability, yung credit rating mo or credit standing mo bumababa. At once your credit standing or credit rating decreases, no, the interest rate goes up. So, pwede natin sabihin ngayon that there should be a maximum level for the liability. Now, before the price of the stock goes down. And we have to look for that maximum level of liability, not before the price of the stock goes down. Kasi nga pagka tumataas ang liability natin, the credit rating will also deteriorate. And once it deteriorated, the interest expense to be charged to the company will be higher. So therefore, kung higher yan, riskier. The net income will be lower and therefore the price of the stock will go down. Although, of course, in general, the effect of liabilities increases your EPS and the return on equity. But the problem is, once you exceeded the limit of your liability, no, the tendency is that the price of the stock is going down or will go down. And since our objective is to maximize the price of the stock of the company, then we have to look for that liability. No, yung may curve siya na pataas, tapos biglang magki-curve siya. So dapat hanapin natin yung peak nung curve na yon before it goes down. No? So tapos dito sabi rin, more debts also increases the expected return on equity. So example, meron tayo dito sa ilalim, no? Meron tayong assets, liabilities, equity, and then you have the ROE. By the way, how do you compute for the ROE class? Kung natatandaan yung formula. How do you compute for the ROE? Tingnan natin si Patricia Kate Mier. How do you compute for the ROE? Patricia?
Yes po, sir.
How do you compute for the ROE?
Annual net income po over shareholders' equity.
Okay, shareholders' equity. But actually, that is average. Huh? Average owner's equity.
Yes.
Kasi kay Brigham kasi hindi siya gumagamit ng average, no? But in the board exam, once you combine an income statement account and a balance sheet account, the balance sheet account should be average. Ay yung equity rito is balance sheet account, di ba? So it should be average. But if there's no way to average that, edi okay lang yung ending balance, no? But there's another way to compute for the ROE using the DuPont. Paano kinocompute yung DuPont na yon? Na Sofia Marie Mosquera. How do you compute the ROE using the DuPont?
Yes po, sir. Ano po yung question, sir? Sorry.
How do you compute the ROE using the DuPont? Kasi dalawang pwedeng pang compute natin ng ROE, di ba? Di ba? Dalawa nga ba yan o tatlo? Actually,
Ano po?
tatlo nga eh.
Net profit margin times return on assets times financial leverage po.
Financial leverage yung pang-trade. Bakit financial leverage yung tawag ron?
Assets over equity po. Wala.
Hindi financial leverage yun. Di ba? Ang tawag ron ay ano? Ang tawag doon ay equity multiplier. Di ba? or ROA times equity multiplier. O, sige, anyway, review lang yon na ng ROE. But here, we are using the net income over the average equity or the equity. O, tingnan ninyo. Yung assets, 100,000 yung first, and then liability 0 and equity is 100,000. So once you compute for the ROE and there is no liability, the ROE is 1:1. Tama ba? Nakita nyo? Nakita nyo?
Yes po.
Okay, so tapos meron tayong liabilities yung 20,000. Natural yung equity deal 80,000. But the ROE now is 1.25. Tapos nung ginawa nating liabilities 50,000, the equity 50,000, the ROE is 2.1 or 2:1. So as you can see, as you increases your liability, your ROE also increases. And also your EPS actually. Kasi yung denominator natin common shares eh. So instead of issuing common shares, no, you have in the liability to finance your project. So therefore the denominator is low. So therefore the ROE is low. The denominator is low, so the ROE is higher and the EPS is higher. Okay? Pero tulad ng sinabi ko, there should be a limit for the liabilities, no? Kasi pumapasok na dyan yung bankruptcy cost din na tinatawag. And if the bankruptcy costs becomes material, no, kasi meron point na immaterial yan eh. At meron siyang point na material. At once it becomes material, that becomes the cost for the price of the stock to go down. Okay, next. So in capital structure natin, meron tayong 4 primary factors that influence capital structure decisions. So one is the business risk. So that is the risk if the firm's assets is not using any debt, no, in its operations. And then the firm's tax position. So depende kung mataas o mababa yung tax, no? Then financial flexibility. So the ability to raise funds in the market. Kasi kung madali, no? Pwede kang kahit na anong gamitin mo, pwede. But that changes your capital structure. And then that depends also on the managerial conservatism or aggressiveness. So what is business risk? So that is the riskiness inherent in the firm's operations if it uses no debt. So that is the variability or uncertainty in the firm's operating incomes because it is affected by fixed cost. Kasi when it comes to business risk, the fixed cost is inherent. No? So bagay, lahat naman merong fixed cost. Ano? But what I'm saying is that the fixed cost, depending on if it is high or low, affects the operating income of the company. And then the business risk varies from industry to industry. So we're saying that if business risk is looking at the fixed cost, so ibig sabihin nun, for those capital-intensive company, now for those capital-intensive company, they have more fixed costs and lower variable cost. But for those company na labor-intensive, the variable cost is higher and the fixed cost is lower. Kaya yung business risk varies from industry to industry. And then to compute, no, for the degree of operating leverage, we have the percentage change in EBIT over percentage change in sales. Another formula for that is that you have the CM over EBIT. No, that is another formula. That is contribution margin over EBIT. No? Ay, tama ba? No, mali. Hindi pala. Tama pala, CM over EBIT. Another formula for that, no? So we have that percentage change in EBIT over sales or CM over EBIT. Pwede rin, no? Pwede rin naman sales over EBIT, no? So pwede, marami siyang pwedeng combination. But this one is a percentage change in EBIT and the percentage change in sales. Okay, so sandali lang ha. Kanina pa ako nagtuturo kasi panay theories, dire-diretso. Okay, so a good measure of business risk is the standard deviation of ROIC because it does not affect the capital structure of the firm. No? So return on invested capital yan. Ayan yung ibig sabihin yan. So you have the this formula to compute, no? Because it does not affect the capital structure of the firm. So we have the formula for that. So ito siya, no? That is EBIT times 1 minus T all over total invested capital. Pasensya na kayo dyan, invest lang nakalagay. But that is total invested capital. Ha? So the return on invested capital, ROIC, measures the after-tax return that the organization provides for all of its investors. Okay, so good measurement pala yan, no? For the business risk. Because it does not affect the capital structure. So what determines business risk? So ito, panay concepts lang din siya, no? You have the demand variability, no? The sales price variability, input cost variability, the product obsolescence, financial risk, regulatory risk, and operating leverage. So the higher the level of fixed cost increases the business risk, no? Kasi nga fixed cost yan, no? Ibig sabihin, kung mataas nga fixed cost natin, the company is capital intensive. And therefore, the effect on the break-even point is higher. Okay, so mataas yung hahabulin nating break-even point pagka mataas yung fixed cost. Ha? But the higher the operating leverage, the higher the magnification of the EBIT as brought by the changes in sales. Yun naman ang kainaman ng mataas na fixed cost. Okay, question bago tayo dumiretso? Clarification? May question kayo? Ronquillo, may question ka ba, Ronquillo? Sofia Marie.
Wala po.
Wala po, sir.
Okay, so sige, okay lang yan. Si Sofia gusto rin sumagot kasi, no? Okay, so walang question, ha? Okay, so continue tayo. Nga, medyo mahaba pa to class, sa totoo lang. So business risk depends in part on the extent to which a firm builds fixed costs into operations. Tapos higher fixed costs lead to a higher business risk. Then operating leverage is the use of mostly fixed costs rather than variable costs. Kasi nga siya ay capital intensive. So ibig sabihin, yung mga depreciation expense matataas, no? Tapos konti yung mga laborers natin. So the reason why yung variable cost natin maliit naman, no? So if most cases are fixed, then the firm has high operating leverage. And if there is a high operating leverage, yung magnification, no, of the EBIT is also bigger as brought by the changes in sales. Okay, effect of operating leverage. Yan, pakita na natin, may computations na tayo ngayon, no? So yung low operating leverage, meron tayong fixed operating cost of 20,000. And then we have the high operating leverage na 50,000. Okay, so syempre, no, kasi low operating nga, kung capital intensive siya, ibig sabihin, kung low operating siya, hindi siya capital intensive, 20,000 lang yung fixed cost. But you can see that the variable cost per unit higher. Then for the one with the higher operating leverage or high operating leverage, the fixed cost is high, but the variable cost per unit is 1 peso. Sige, tandaan nyo yan, ha? Tandaan nyo. Kasi kailangan natin yan sa mga susunod na exercises para hindi tayo pabalik-balik dyan, ha? So, okay na? Sa bagay, may copy na yata kayo, no? May copy na kayo nito. Sige, tingnan natin to. So, we have the base sales, no? Which is 60,000 units. Once multiplied by 2 pesos, you have 120. And then the variable cost, 90,000. So, yung 60,000 multiplied by 1.5. And then you have the contribution margin, 30. Fixed cost, 20,000. So, for an EBIT of 10,000 pesos. Okay ba yan? Okay, so let's say there is a 10% increase in sales. So, making it 66,000 units. Meron na tayong sales, variable, contribution margin, fixed cost to arrive at a EBIT of 13,000. Now, if you use the formula, which is the change in EBIT, at saka yung change in sales, we can get that the change is Nakalimutan ko, no? 30 is 3. 3 pala. 3 ang sagot, no? The answer is 3. So the DOL or the operating leverage is 3. So if you multiply that by 10%, no, by 10%, you will get 30% increase because there is an increase in sales. But if there is a decrease of 10%, then there will be also a 30% decrease in EBIT. Okay, kung titingnan mo, yung 10% increase in sales, if you look at the EBIT, there is a 30% increase na 3,000. And if there's a 10% decrease in sales, now once we multiply the 10% by 3, which is the DOL, 3,000 din yun. So ibabawas natin doon sa 10,000, 7,000. So decrease naman siya. So this is a low operating leverage, kasi fixed cost natin ay 20,000. Naintindihan nyo, class? Yes or
Yes
no?
po, sir.
Okay, thank you. Next, we have the high operating leverage. Ito yung high operating leverage natin. So, the same base, no? But this time, the fixed cost is higher. So, 50,000. So, the EBIT now for the base sales is 10,000. Now, again, if you use the formula, we will get that the DOL is 6. 6. So that 6, once multiplied by 10%, there will be an increase in sales. Increase in EBIT of 16,000. So bali kung nag-6 siya, times dun sa 10,000, so ulit. 6 yung degree of operating leverage natin. So once we multiply that by the increase in sales of 10%, ibig sabihin nun, magkakaroon tayo ng 60% increase in EBIT. Okay, tignan nyo, kung minultiply natin yung 60% na yun doon sa 10,000, ang makukuha mo ay 6,000. No? So you add that 6,000 to the 10,000, so you will get 16,000. So kung makikita nyo rin, the effect of a higher fixed cost, no, on your EBIT is also higher because it magnifies the change in sales. No? I mean, it magnifies the EBIT by the change in sales. Ganun din pagka nag-decrease. No? It will magnify the decrease in EBIT as brought by the decrease in sales. Pero nanggaling siya sa DOL na 6 and then multiply by the percentage increase or percentage decrease, and that will be the effect to your EBIT. Naintindihan ba? Ha?
Yes po, sir.
Okay, so sigurado ha? Okay, next tayo. Effect of operating leverage pa rin. So, ayun na nga, operating leverage magnifies EBIT and ROE for a given change in sales. So, tignan nyo rito, no? This one, the graph on the left side has lower fixed cost. Kasi nga siya ay hindi capital intensive. So, the effect of that is that the total cost is steeper. And then, therefore, the break-even point is lower. No? Pero yun nga, yung magnification ng ating EBIT, hindi masyadong maganda. But on the right side naman, now the fixed cost is higher, so therefore the total cost naman is less steeper compared to the one with less fixed cost. But this one magnifies, no, your EBIT as brought by the changes in sales. So malaki din ang effect pagdating sa EBIT, no? Pagka nagkaroon ng change dun sa sales. And then what happens if variable costs change? Eh syempre kung ang variable cost magdi-decrease, yung CM natin tataas. At yung tataas ng CM, yung BEP babaksak. No? O bababa. And then if the variable cost increases, yung contribution margin natin will decrease, and then therefore the break-even point is to increase. Okay, napag-aralan na rin yata nyo to sa management accounting eh. Ha? Napag-aralan nyo na ba to?
Yes po.
O, sana pala hindi na natin diniscuss. Ha? Di bali, okay lang yan. Review lang naman, no? Parang review natin. Okay, so What about this? Napag-aralan niyo ba sa management accounting to? Financial leverage. Napag-aralan ba? Yes or no?
Sir, parang operating leverage lang po.
Operating lang yung dati. Sana pala hindi natin diniscuss operating leverage. Diretso tayo dito, no? Anyway, okay lang naman kasi review natin yon, no? Anyway, when we see financial leverage, this time, no, you are putting liabilities, or you're issuing liabilities, no, or adding liabilities to your balance sheet. And therefore, the risk of the company, particularly to the stockholders, will increase. Bakit? Kasi pagka nagkaroon ng bankruptcy or the company will be liquidated, no, instead of the stockholders receiving first, no, the liquidation value or the proceeds from the liquidation, no, it is the creditors who will accept first, di ba? Bago sila. And besides, no, if you have these liabilities in your books and the liabilities increases, no, the riskiness, no, of the company will also increase. O kaya ganun siya, no? So financial leverage is the use of debt and preferred stock. Then we have the financial leverage increases the expected rate of return on investment and risk to the stockholders. So I explained that already. Now, the standard deviation of companies with high financial leverage have higher ROE and EPS. So ito, pinakita na rin natin doon sa kaninang parang table ko, no? Na yung may assets, liabilities, and equity. And then, of course, kung ang liability natin nandoon nga, yung common stock natin o yung shares natin will not increase. So therefore, yung EPS natin tumataas. So the higher the debt in the capital structure, the riskier the debt and the higher the interest rate to be charged by the lender. So, di ba, sinabi ko nga, pagka dumadami yung liabilities nila, yung credit standing mo, bumababa. At pagka bumaba, yung interest rate mo, tataas. Now, to compute for the degree of financial leverage, no, we have the percentage change in EPS and the percentage change in EBIT. So, this time, yung change in EBIT will magnify the EPS. No? Kanina, yung change in sales will magnify the EBIT. But this time, the change in EBIT, no, will magnify your EPS. Okay, so ito naman, no? So we have the firm 0 at saka firm 50. So yung firm 0, ibig sabihin nun, wala siyang liability. So the capital structure is entirely made of common equity. So the number of shares, 10,000 shares, no? Another one is firm 50. So ibig sabihin nun, 50% is financed by equity, by debt, and the 50% is financed by equity. So 50% debt, 50% equity. Tignan natin to. Okay, so meron tayong base sales ulit, no? But this time we start with EBIT kasi yung EBIT naman ang ginagamit na rito tsaka yung EPS. No? So we have the base sales na 10,000, interest expense kasi walang liability, 10,000, ang EBT, then taxes 4,000, and then you have the net income of 6,000. So giving you an EPS of 0.60. Kasi yung number of shares natin ay 10,000 shares, di ba? 10,000 shares. So 0.60. Now let's say yung EBIT nito nag-increase by 20%. So using the formula again for that percentage change in EPS and the percentage change in EBIT, that will give you a degree of financial leverage of ilan nga ba yun? Para sigurado ako 20%. Percentage change ng EPS is 72.20. Tsaka yung isa rin ay so bali 1. O nga naman, 1 siya kasi 2020, no? 1, ha? O nga naman, 1 siya, no? So ibig sabihin, yung ating naniguro pa ako, no, class, ha? 1 nga naman dapat yan kasi 2020 nga naman siya. So anyway, natuwa ako sa sarili ko, no? So anyway, using the formula of the percentage change in EPS all over the percentage change in EBIT, you have 0.20 and 0.20. So you get 1, no? So 1 ngayon, kung nagkaroon ng increase sa EBIT na 20%, so 1 times 20%, so 20% yung increase. So the same thing with the decrease, no? Pagka nag-decrease ng 20%, magdi-decrease din ng 20%. Okay, tignan mo yung EPS. From 0.60, naging 0.72. Kasi magkakaroon ka ng increase na 20%. Diba? Nakuha nyo, class? Pareho lang naman yung computation talaga ng ano niya, ng DOL. Kaya lang, for the DFL, we start with EBIT. Nakuha nyo, class? Yes, or no?
po.
Yes. Yung iba naman, lagi kong di ko naririnig yung iba. Naintindihan ba? O kaya sulat lang sa chat box kung naintindihan. Para bago ako dumiretso, alam ko naintindihan talaga. Can you please say yes or no? If you understood the lesson. Okay, so may sumagot. What about the rest? Dalawa lang yata nakaintindi. Ilan pa? Okay, so okay, thank you. Punta tayo dun sa mataas naman na financial leverage. Kasi dito wala tayong liability, kaya zero yung interest expense natin. So this time meron tayong liability and the interest expense is 2,000. So kung titingnan natin, no, class, no, I do not have explain the details na, no, except for the interest expense. Makikita natin na yung net income niya bumaba, no, compared to this one. Kasi 6,000 naging 4,008. Then the 7,002 naging 6,000. But you will notice that the EPS increased, no? Nag-increase siya, 0.96 and 1.20. Bakit? Because they did not use common shares. No? They use liabilities. So despite of the decrease in net income, your EPS increased because the denominator for the computation of EPS decreased. So lumalabas, pagka kinumpute natin yung percentage change in EPS all over the percentage change in EBIT, you will get 1.25. You will get 1.25. So, kung nakuha natin yung 1.25, and if there is an increase in EBIT of 20% times 1.25, so meaning there will be an increase of 25%, no, in your EPS. So the same thing, if there's a decrease of 20%, there will be a decrease of 20% in your EPS. Okay? So, question? Question? Okay, none? Okay, I'll go to the next. No? So, another formula, no, for the degree of financial leverage is that we have the EBIT all over EBIT minus I. And if there is the presence of the preferred stock, you have the EBIT all over EBIT minus I minus the dividend. No? Dividend required, no, for the preferred stock. Ngayon tatanungin nyo, bakit may 1 minus T na denominator? Kasi ang dividend, no, for the preferred stock, they are not tax deductible. I mean, they are not subject to tax. No, they are not subject to tax. Now, if they are not subject to tax, and let's say you receive the dividend, so as if the one you received is already net of tax. Diba? Kasi wala siyang tax eh. So if you receive the dividend for the preferred stock, so as if the one you receive is already after tax. Also, we have to be consistent kasi yung I dito is before tax. Yung dividend, no tax. So parang lumalabas, the effect is after tax siya. No? So kaya para makuha natin yung parang gross of tax na is we divide that by 1 minus T. Para makuha mo yung gross. Although of course, walang tax yun. Tulad na sinabi ko, walang tax ang preferred stock. But the effect is that it is parang after tax. So, kaya kailangan parang ibalik natin yung tax. Okay, so let's go now to
Sir,
the
question po.
Oh, question.
Yung sa formula po na percentage change, pwede rin po yan kahit may preferred stock.
Tingnan natin. Parang lalabas, hindi. No? Kasi meron tayong EBIT rito, meron tayong EPS doon. So you use the percentage change in EPS, lalabas, oo. Kasi tatanggalin natin dapat muna yung yung preferred stock lumalabas. Kasi change in EBIT, nahirapan ako sa tanong mong yun Pero kung percentage change in EBIT, parang tingin ko, pwede siguro, but you have to derive that formula. Tingin ko pwede. Kasi change in EBIT lang naman siya. So kung change in EBIT before interest and taxes and you have that interest, palagay ko dapat idagdag mo yung dividends. No, palagay ko kasi wala pa akong na-encounter na gano'n na Pero very good question, no? Nahirapan ako doon sa tanong mong yun, Pero tulad ng sinabi ko, palagay ko pwede. But if there is a preferred stock, I think you have to add the preferred stock. Kasi dito yung EBIT lang Kasi kung titingnan mo yung formula dito sa ilalim, no? Lumalabas kasi binabawas natin yung EBIT. Binabawas natin. So dapat laging before interest and taxes. Yung deferred dividend natin, hindi. Tama. Pareho pa rin siya. Sino ba yung nagtanong? Si Matthew ba yun?
Yes po, sir.
Hindi siya, walang effect. Tama tong percentage change in EBIT pa rin. You know why? Kasi yung dividend naman kasi nanggagaling talaga din naman sa net income after tax. Manggagaling dun sa EBIT. EBIT pa rin siya. No? Ibig sabihin, sorry. Ulit. Kasi yung preferred dividend will be coming from the net income after tax. Tama ba? So, kung net income after tax, ibinalik naman natin yung tax. Binalik natin yung interest. So, nagkaroon siya ng EBIT. So, dun sa EBIT na yon, wala pang bawas yung dividend. Kaya we do not need to add back the dividend. Kaya the DFL, which is percentage change in EPS and the percentage change in EBIT, will still hold true. Kasi ang dividends naman, ibinabawas natin yan after tax. But since we already have the EBIT, no, which is before the dividend payment, so the formula that is percentage change in EPS and the percentage change in EBIT still holds true. Okay? Palagay mo, Matthew.
Po.
Anong palagay mo doon sa sinabi ko? Tama ba o mali?
Yes po, sir.
Tama, malamang tama, di ba? Kasi we are using the EBIT. At yung EBIT, wala pa tayong binabawas na dividends.
Tsaka, sir, parang feel ko lang po, sir.
Okay,
Yung earnings per share po kasi, nabawas na po yung dividends for the preferred stock.
That's correct, no? Yung EPS. Kasi yung sa preferred stock din, if there is a preferred stock, so we have to remove the preferred stock. Tama yan, tama. No? Kasi we're concerned only of the common shares. Tama rin yun, no? But looking at the EBIT nga, wala pang dividend dyan. Kasi kung binabawas din natin yung dividend before the EBIT, ay dapat idagdag natin siya. Pero since binabawas naman natin ang dividends from the retained earnings actually, or the net income after tax, so you do not have to change the formula for the percentage change in EPS at saka percentage change in EBIT. Okay? Ang galing mo talaga mga magtanong. Napag-iisip mo rin ako. Ang galing.
Thank you, sir.
Kaya huwag ka na magtanong, Magtanong. Kung magtatanong ka yung sarili na lang, Matthew. Nahirapan ako sa tanong mo. Okay, anyway, ano lang yun, joke lang yung class, ha? Nagpapatawa lang ako. Natutuwa nga ako pagka nagtatanong kayong gano'n kasi pati ako nag-iisip. Ha? And to be honest with you, class, once the students ask also questions, we the faculty are also learning from your question. Natutuwa kami pagka ganyan. Tulad ng tanong na yun, ngayon ko lang naisip yun. Tama nga naman, meron kasing gano'n, ha? So, actually, wala akong nabasang libro na ganyan. Marami na ako actually, to be honest with you rin, being an author nga ng financial management, I read a lot of books in financial management. But that is the first time na narinig ko yung question na yung dapat bang bago yung DFL na yun? Because the authors are not discussing that. Ngayon ko lang na-realize, no? O nga naman, tama yun, ha? Okay, so thank you for that question. Ako ay
Thank you din po, sir.
Oo, natuto din ako doon, ha? Natuto rin ako ron. Okay, so it is the one that maximizes, balik ko muna yan, optimal capital structure. So like what I said, it is the maximum, or it is the one that maximizes the price of the firm stock. And it is the debt ratio that is lower than the one that maximizes expected EPS. Mamaya makikita natin yan, no? Makikita nyo na yung highest EPS is the one with the highest liability. Ulitin ko, ha? The one that maximizes the expected EPS is the one also that has the highest liability. But the problem is that is not the one that maximizes the stock price. Rather, the one that is lower than the highest EPS, actually second nga eh. Second to the highest expected EPS is the one that gives you the highest price of the stock. No? Pero depende pa rin yung sa capital structure natin. But the point is, the one with the highest liability that gives you the highest EPS is not the one that maximizes the price of stock. Rather, the one with the lower EPS is the one that gives you the maximum price of the stock. Okay? So at a certain extent, the higher debt levels increases the expected EPS and stock prices. However, at a certain point, a high level of debts also increases the firm's risk, which raises the cost of equity and has the tendency to reduce stock price. Okay, kaya sabi natin nga, dapat at certain level of liability, we should be able to determine yung maximum liability that we can use before the price of the stock goes down. Kasi nga, the higher the liability, the higher the risk, the higher the interest rate that will be charged to the company, to the point that it is now risky for the company to have the bankruptcy cost that reduces the price of the stock of the company. Okay, so let's talk of recapitalization. So what does it mean? So yung recapitalization, from the word recapitalization, so you are trying to change the capital structure of the company. So how it is being done? By borrowing. And then once you borrowed money, the entire amount of the borrowing will be used to purchase your stock, repurchase your stock. So it becomes what? A treasury stock. And if it is a treasury stock, these treasury stocks are deducted from your common shares outstanding. Okay? Maliwanag ba? Okay, next. Example natin, ito. Ito, nandito na tayo sa pag-determine ng optimum capital structure. Pero 9:49 na, Sana matapos natin. Okay, so meron tayong borrowed amount. So meron tayong 250, 500, 750, 1,000. So actually millions yan, in thousands pala. So 250,000, 500,000, 750,000, 1 million. So the total assets, 2 million. So kung meron tayong 250 by 2,000, 0.125. 500 by 2,000, 0.25, So yung debt equity ratio, actually, hindi mo kailangan yung debt equity ratio na yan dyan, Kasi ang kailangan natin yung equity to assets din. Because that comprises the capital structure. Hindi naman DE. Kundi dapat EA, Equity to assets. Pero anyway, ganyan siya, So the bond rating if you have 250 liability is AA, and that gives you cost of capital of 8% before tax, and then 500, 9%, 750, 11.5, and 1,000, 14%. So as you increases your liability, the credit rating or the bond rating decreases. No, kasi AA, BBB, BB. Huh? And the cost of debt before tax goes higher also. Okay, next. So what is the effect of recapitalization at various debt levels on the EPS and times interest earned at each level? No? So ito yung mga information na binigay sa atin. We have the dividends, dividend zero, so we're using the EPS instead. So we can use, instead of the dividends, we're using the EPS in replacement of the dividends. Okay, so EPS. So meron tayong computation na EBIT minus the interest, then times 1 minus T. Then you have the shares outstanding. Okay, so for this case, we do not have the liability yet. No? Wala pa tayong liability. So that's why it is 400,000 times 0.6 over 80,000. So you have 3 for the EPS. Now let us assume that they issued already 250 na liabilities. So ito. And the interest rate is 8% based on the table I showed you, di ba? So they used liability of 250,000 and then they used that to purchase your stocks, your own stocks. And since the price of the stock in the market is 25, so you divide 250,000 by 25. So that gives you 10,000. So in 10,000 ngayon will be a treasury stock, which will be deducted from your common shares outstanding. So magiging 70,000. And then this time we have the interest. No? Yung 0.08 times 250,000, then deduct from the EBIT, and then times the net of tax na 0.60, and then divide by 70,000, you will get the EPS to be 3.26. Nakuha nyo, class? Naintindihan? Say yes or no?
Yes.
Okay, yes. Si tanong natin. Venus. Ito pala yung pangalan ng pagka-sister ng student ko dati. Venus.
Yes, sir.
Naintindihan mo?
Opo, konti.
Konti. Bakit? Ba't konti?
De-review na lang po ulit.
Sige, but sa review may matagal pa naman tayo Matagal pa naman tayo. Because the quiz will be on October 2. At hanggang capital structure lang tayo. Hindi nakasama yata yung money markets, no? Nahirapan din sila Mahirap talaga kasi madami, no? Okay, so kumusta mo ako sa ate mo,
Yes, sir. Nandito po siya.
Sige, kumusta? Hello. Yung kape ko, yan yan ang aking assistant sa TUWA, no? Lagi kong inuutosan bumili ng kape ko. Okay, so anyway, so going back, no? We can see that the EPS now will increase to 3.26 because of the presence of the liability. Kaya tignan yung EPS 3.26, dati 3. So tumaas siya because of the presence of liability and the decrease of the common shares outstanding. So despite of the decrease in net income, your common shares also decreased, no? By 10,000. So the reason why your EPS increased to 3.26. Now to compute for the times interest earned, now we have that interest expense of 20,000 and then the EBIT of 400,000. So the times interest earned is 20 times. Ngayon kung 500,000, the same procedure, no? 500,000 divided by 25, you get 20,000 shares. And then the 20,000 shares deduct from 80,000. And then the numerator, this time the interest rate is 9%. You multiply by the 500,000. So you get the interest expense. So minus from 400,000 and then times the net of tax of 0.60. And you will get the EPS of 3.55. And then for the tie, now you will get 8.9 times. So you can see as you added liabilities, But to the book, the EPS increases. However, the interest, no, earned, no, times interest earned decreases. Kasi dito EPS 355, yung tie natin 8.9. O, di ba? Dito 3.26 tapos 20 times. So yung EPS natin tumataas pero yung tie natin bumababa. Eh kung bumababa yung tie, ibig sabihin the company now is become riskier. Ha? Kasi yung capacity mo to pay the interest decreases. Okay? Okay, so ito. So ganun din ang procedure dito, class, ha? Hindi ko na-explain para matapos ko itong table na to. So ganun din ang gagawin dyan sa 750,000. You buy the stocks and then you compute for the EPS at saka tie, no? So anyway, I have the summary here, class. Ito yung summary natin. So as you increases, no, your debts, ayan, 250 divided 250, 500, 750 and 1 million, the EPS increases, no? 3, 326, 355, 3.77, 3.9. But the tie or the times interest earned decreases from 20 to 8.9, 4.6, and 2.9. Okay, tingnan nyo yung risk, no? Akala nyo pagka tumataas yung EPS, eh gumaganda yung company rin. Hindi, kasi yung tie mo naman bumababa. Okay, because as you increases your liability, the company becomes riskier, no? And of course, yung stockholders natin, bears all the risk. Kasi instead of receiving the entire proceeds from selling the assets of the company, once it becomes bankrupt, they will be now the second, no, people to receive. Eh kung may preferred stock pa yan, di-trade pa siya. Di ba? So, ganun siya. Okay, so the Hamada equation. Class, palagay ko, mag-stop na ako dito. Hindi na natin matatapos. Yung isang class ko, natapos ko eh. Kaya lang, yung last time, yung isang class ko, pangalan nito, they want an asynchronous on Thursday. So kayo, hindi tayo pwede mag-asynchronous on Thursday. Ha? So we will try to finish this. O pwede kayo mag-overtime today. Pwede ba kayo mag-overtime? May klase ba kayo after this? Hello? May klase ba kayo? Wala sumasagot.
Sir, upon checking po, parang wala naman pong announcement na mag-hold ng synchronous yung next prof namin.
Gusto nyo tapusin muna natin ngayon? Tapos mag-asynchronous tayo sa Thursday, but I will give you the problems. Then the problems, anong gusto nyo? With solutions? Without solutions? Kasi my other class, yung kanina, 383, they want with the solutions. Tapos daw sa Tuesday, magdi-discuss kami next week with the solutions na rin. O with na rin. O sige, ganun.
Same po.
O sige. O tapusin na natin ngayon para sa Thursday, asynchronous tayo. And then I can provide you the problems with the solutions. And then on Tuesday, we will discuss the solutions. Okay ba yan? Kasi the other class to yung 318 they requested for synchronous. Unless gusto nyo mag-synchronous tayo sa Thursday. So by the way, yung quiz nga natin is on October 2. October 2 siya. And then the coverage is only the reserve system and monetary policy and then the capital structure and leverage. Ganun siya. O, tingnan natin, ha? Okay, we'll confirm pa rin pagka gusto nila. Total, after this, we still have 3 meetings. Okay ba? O, sige, tapusin natin, ha? Para wala tayong problema. Okay, so yung Hamada equation, to shorten, no? Yung Hamada equation kasi, some companies are not levered. So meaning they do not have liabilities. So therefore, you cannot compute for the beta. So this Hamada equation help us, no, to compute for the beta of the company. Now it becomes levered. So from unlevered to levered, ang gagawin natin dito sa company na to, no? And then this Hamada equation also gives us, no, the effect no, of the increasing liability to the beta and to the cost of capital, no, in particular equity. Kasi we are going to use the CAPM for the for the for the cost of equity. So this one also, the Hamad equation shows you the change in the capital structure, no? So pagka nag-change yung capital structure, ibig sabihin nun, yung WACC ni firm also will also change. Because as you increases your liability, no, the beta of the company will also increase. Bakit tumataas yung beta? Because the company becomes riskier. And therefore, the cost of the equity also will also increase. Also, yun ang sinasabi ni Hamad equation. But Hamad equation is helping us to convert, no, the unlevered company to a levered company. So ito yung formula niya. Sandali, pwede ba ako mag-break sandali? Kukuha lang ako ng tubig, ha? Sandali lang, ha? Sandali lang. Okay, so ito yung ating formula for the Hamad equation. So you have the B subscript of L and then the B subscript of U. Then 1 plus, no, 1 minus T times that DE, no? So the DE is the debt equity ratio measured by the financial leverage under the Hamada equation, no? Kaya binibigay din niya yung DE, pero actually dapat niya, hindi na yan, no? Kasi pagdating doon sa WACC, no? Pero huwag natin pakialaman yung formula ni Hamada. Formula niya yan, no? So, but we are applying this, no? Kasi very important din daw, ha? So, at the told, by the way, class, no? In the board exam, lumabas na to. Lumabas na yan. And many were actually surprised when the Hamada equation was given, no? Marami nagulat nung binigay ito. Okay, so yan na nga yung formula natin. And then you have the given, no? Below, meron tayong given sa baba. So ito, suppose the risk-free rate is 6%, as is the market risk premium, the unlevered beta of the firm is 1. Kasi kung ang beta ng company talaga, pagka walang liabilities, parang the same as the market. So being 1. And then the total assets was 2 million. Okay, so dito, ito yung computation, no? So actually, we are using also the liabilities that we used a while ago. Na may debt 0, meron debt 250, debt 500, and then debt 750. So hindi ko na lang pinagamit yung 1,000 or mga thousands na to. Ha? But for the debt 0, the beta of the company will be 1. No? Kasi ito ay 0, di ba? Tapos plus 1 times 1 plus times 1 is 1. Kaya pagdating rito, naging si unlevered company, no, that has a beta of 1 becomes will have a beta of 1 also, no? Magiging levered beta na siya na 1 kasi ang levered beta niya dati 1, but this time levered beta na siya 1. Kasi from walang utang, pero ito wala pa rin siyang utang, kaya lumalabas yung beta niya 1 pa rin. But the cost of equity is 12%, no? 12%. But this time, nagdagdag na tayo ngayon ng liability, no? So we can now compute for the beta. Kasi pagka ang company does not have a liability, yung unlevered beta niya nga is 1. But once you compute the levered beta of this unlevered company, still the beta will be 1. No? Pero ngayon magbabago siya if there is an increase in liability o meron ng liability. No? So meron na tayo ngayon dito, if debt is equivalent to 250, makikita ninyo, dito sa part na to, meron na siyang 250 all over 1,750. No? Tapos noon, multiply natin sa 0.6, which is the market premium. No? Yan yung market premium natin, di ba? Kasi sabi rito ay 6% as a market risk premium. Ang market risk premium na siya, no? Okay, so market risk premium na yan. So, ito yung 0.6. Tapos, yun na nga, multiply sa 1, then multiply dun sa 1. So, this one is 1.087. Pero take note pala, class, ha? Kasi may naalala akong problem dati. Dito, balik ko lang dito. Yung BU, unlevered beta. Di ba sinabi ko sa inyo na ang market beta actually is 1. So kung wala siyang liability, unlevered beta niya is also 1. No, pero may nakita ko na isang problem dati na yung beta ng unlevered company is more than 1. Okay, ibig sabihin, kung more than 1 yan, yun ang gagamitin nyo. But in this example kasi we use the unlevered beta to be 1. Ha? Pero pagka unlevered beta ng company with no liabilities or will change, no, the structure of the company's financial structure, yun ang gamitin nyo, yung beta na binigay, ha? So, ganon, ha? So, this one, yun na nga. So, makikita nyo, class, dito, sa part na to, nagbago yung beta natin, no? So, from 1, naging 1.0857 because of the presence of the liability of 250. And then, once you apply this beta to your CAPM, ito, meron na tayong 1.0857 times 6% plus 6%. So the cost of equity now is 12.51%. So the same thing when we added, no, yung another 250 to your liability, now it's 500. So 500, ito yon, divided by 1,500, no? Tapos multiply natin with it so 1. Unlevered beta ngayon niya ay 1.2. And then the cost of equity is 13.2. So once we added the 750, ang magiging beta natin ulit, tataas na naman, 1.36. And then the liability is, cost of equity is 14.16%. So you would notice that as the debt increases, no, the levered beta will also increase and the cost of equity will also increase. So nandito yan, no? Ito yung summary class. Okay yan, no? So makikita natin na yung levered beta, no, ito, as you increases, if the liability increases, the levered beta also increases. And the cost of equity also increases. Kasi nga, nagiging risky si company as you increase your liabilities. So therefore, yung levered beta mo, tumataas na, pati yung cost of equity mo, tataas na. Maliwanag ba, class? Maliwanag? Hello? Is it clear?
Yes po, sir.
Okay, so punta tayo ngayon sa susunod. Calculating for the WACC. So, a while ago, pinakita ko paano mag-compute ng WACC, di ba? And you studied that also in your cost of capital in financial management. So, for 250, for example, ayan, 250. So, ang debt ratio natin ay 12.5 and then the equity ratio is 87.5. So, yung 12.5 na debt ratio natin multiply sa 4.8 and then the equity ratio of 87.5 times dun sa na-compute natin sa CAPM na 12.51, you will get a weighted average cost of capital of 11.55%. Then when the amount borrowed is 500, the debt ratio is 25. So you multiply this with the cost of debt after tax of 5.4%, and then plus the equity ratio times the cost of equity na 13.2. So the weighted average cost of capital is 11.25%. So you do that up to the end, bale. And you would notice that the lowest WACC is at a debt ratio of 25%, meaning you have to borrow money amounting to 500,000 pesos. Okay? Naintindihan ba, class? Naintindihan pa?
Yes po, sir.
Okay, so next. Di ba meron tayong ginagamit natin na stock price with zero growth, no? Yan yung ginagamit nating formula. D1 over RS. Tama ba? But in this case, the EG is 0. Ay, tama naman ang formula. No? Ito naman talaga is 0. Wala naman plus G dito. No? But the problem is, the dividend, expected dividend is not given in this problem. So instead, we can use the EPS to replace the expected dividend. So we can have now the expected EPS. Kaya pagdating rito, wag na yan, pabayaan mo na yan. Explain ko
Sir?
naman. Oh,
Ibig sabihin po, yung if wala pong growth, yung EPS po will also be equal to dividends per share?
ulit, di ko nakuha.
Since wala pong...
Hindi ganon. Kung may growth yan, kahit na EPS ang ginamit natin, may growth pa rin.
Sir, if wala pong growth yan, yung dividends per share po equal din po sa earnings per share?
Lalabas ganon.
Okay po.
Pero not the value itself, kasi hindi natin mapuprove yun, no? Dito sa problem na to. But since because the D1 or the expected dividend is not present, but since yung EPS is also a measurement, no, of an income to the stockholders, we can use also the EPS to compute for the price of the stock. Okay? Kasi yung D1 naman is to be received by the stockholders. The EPS is the one also being received by the stockholders, coming from the net income of the company. So therefore, we can also use the EPS in replacement to D1 to compute. Kaya kung may growth yan, no? Di magkakaroon dito ng plus G, di ba? Magkakaroon dito ng plus G. Plus G ba o minus G? Case of, tama, plus G yan, no? Plus G. So, kung may plus G yan, EPS ang ginamit natin, may plus G din yon. Ganun ba yun ba yung sagot sa tanong mo? Tama ba yung sagot ko sa tanong mo?
Yes po, sir. Parang tinanong ko lang po, sir, if kung wala nga pong growth, yun nga po, EPS na po yung gagamitin dun sa numerator.
Actually, we can use nga yung D1 kasi meron naman tayong formula na zero growth at saka constant growth, di ba? At saka yung variable growth. So in this case, to simplify, no, the computation, we did not include the G. Wala tayong G na nilagay. Pero kung may G na binigay sa problem, ilagyan mo ng G. Ganun lang siya.
Okay po, sir.
Okay, so ganun siya. Okay, next. So ito, wag na natin ano ito ha, i-explain ko naman dito. So ito yung summary actually class. So tingnan ninyo, if you are using the EPS here, not to compute for the price of the stock. So we are using yung expected EPS 3.55 no, as a dividend, and then once you compute no, yung para sa price ng stock, kumbaga 3.55 divided by dun sa WACC yan. So 3.55 divided by 0.1125, you will get, aso na yun? Ulit-ulit, no? We have the, tama ba yun? 3.55 divided by 0.11, ay mali, 3.55. Ito pa yung estimated price. Yung 20, ano yun? Hindi, tama nga, sandali. Saan ba nakuha yun? Sandali lang ha. Nakalimutan ko bigla. EPS RS. Tama. EPS naman yun ha. By the... Saan na yun? 3.55 divided by 0.1320. Ayun. So, ayun, no? So, we have the expected EPS at 3.55. And then we have the cost of equity. Ito yung ginamit natin na CAPM. Diba? Ginawa natin yung cost of equity. Tama ba yung using the Hamada equation? Natatandaan nyo? So ito, ulitin natin ha, para makita nyo. So ito, diba? So in this case, we already included, diba, yung liabilities. Ito, napasok na natin yung liabilities yan. Kaya nagkaroon tayo ng beta, and then we have this one to get the cost of equity. So lumalabas yan yung WACC natin, di ba? Okay, so balik tayo rito ha. O, kung makikita ninyo, meron tayong expected EPS na 3.55, then divided by the cost of equity using the CAPM na 0.1320. And you will get 26.89 for the estimated price. 26.89. Nakita nyo, class? Nakita nyo? Ayan, no, naka-highlight. Actually, yung yellow yan eh. Yung yellow, yan na yon. So you would notice, class, that the one with the highest estimated price is the one with the lowest WACC. No? The one with the highest estimated price is the one with the lowest WACC, na 11.25%. And dun sa cost of equity, we already included the effect. No? We included the effect already of the liabilities included, no, in the cost of equity nga. Nakapasok na siya ron. Okay, so yan yung summary actually ng mga ginawa natin kanina. No, but the highlight is that the highest estimated price is 26.89 if the liability is 500,000, because that will give you 11.25% WACC. And we are saying, no, a while ago that the lowest WACC will give you the highest intrinsic price of the stock. Makita naman ninyo, no? Tama naman yung ating mga ginawa kanina. Okay? Naintindihan ba, class? Kaya hindi sinasabi na kung ano yung pinakamataas na EPS, siya yung pinakamataas. Hindi, no? Kasi ito yung pinakamataas na EPS. But the highest price is the one with the EPS lower than the highest. Kaya nga second pa nga siya kung tutusin, no? So, and then the WACC, no, yung lowest WACC is the one that gives you the highest estimated price of 26.89. So therefore, yung capital structure natin dapat ay 25% debt and then 75% equity. So yung capital structure natin should be 25-75. Okay? So if the capital structure will change, no, either increase or decrease in the debt to assets and to the equity to assets, your WACC will increase, and therefore the price of the stock will decrease. Okay, so yung capital structure, ito yung mga theories naman, no? According to Modigliani and Miller, no? Develop the capital structure irrelevance proposition. So actually, to be short, no, sabi ni Modigliani and Miller, regardless, no, kung ano raw yung capital structure ng company. Yun ang sinasabi niya. But the problem with Modigliani and Miller, ang dami ng assumptions na ginawa. No brokerage, no taxes, no bankruptcy costs, which are impossible in the real world. Kasi meron at meron niya mga yan, no? But anyway, kay Modigliani and Miller, sinasabi niya, it does not matter what capital structure a company uses to finance its operations. Pero ang sinasabi kasi ni Modigliani and Miller, the ideal is actually 100% liability and 0% debt. And that will maximize, sabi ng ganon, yung EPS ng company, which is true naman. But you cannot tell if that will maximizes the price of the stock because of the presence of risk. Okay, so sa pecking order quantity naman, pecking order theory naman, sabi niya, yung sequence dapat ganito. Spontaneous credit such as accounts payable and accruals, tapos interest bearing, preferred, retained, and then new common stocks. Kaya ganyan yung ayos kasi class dahil pataas ng pataas yung cost of capital niyan, no? But the pecking order theory, no, contradicts the idea a while ago do sa capital structure natin na dapat di kasama yung accounts payable, yung accrual. Kasi siya, ang sinasabi niya, according to the pecking order quantity theory, dapat lahat kasama. Pero di ba, pinag-usapan natin sa umpisa pa lang, that the accounts payable and the accrual should be removed. No? Tapos ganyan yung arrangement kasi ang pinakamababang cost, interest bearing, followed by preferred stocks, and then retained earnings, and then the highest cost is the new common stock. O yung trade-off theory naman, ano sinasabi nito? Now, the trade-off theory is that it states that capital structure is based on a trade-off between tax shields and bankruptcy costs. So, sinasabi nga natin, as you increases your liability, the tax shield of the company also increases. At pagka tumaas yung tax shield, that benefits the stockholders. But the problem with that is that there is a trade-off with the bankruptcy costs, no? Kasi once you increase your liability, your bankruptcy cost becomes material. Okay? Kaya nga dapat meron siyang threshold, no? Meron tayong maximum. Di ba? Nakita naman natin sa computation natin, that will increase the price of the stock. And then the last one, no, signaling effects. So, sinasabi rito, meron tayong dalawang klaseng signaling effects. One is the symmetric and the other one is the asymmetric. So, when we say symmetric, the information by the investors and managers are the same, no, about the company. Pero pwede ba yun? Siyempre, mas may alam nung nasa loob. Kaya meron din tinatawag tayong asymmetric information, no, which tells us that the managers have different and usually better information about firms' prospects than do investors. But the signaling effects is saying something about the company, no? So let's say they have a project, and then the project, no, they are not so sure about the project if it will be successful or not. Ngayon, kung hindi siya successful tingin nila, and they need funding for that, they will not issue liabilities. Now they will issue stocks because they would like to share the risk to other investors. But that additional shares of stocks to be issued by the company, no, will be perceived by the investors as a way of the company to pursue with the project, but would like to share the risks with the other investors. So in that case, the price of the stock of the company chances are will decline. Kasi sinishare mo lang yung risk mo sa amin, sabi gano'n ng mga investors. Kaya nagbebenta ka ng stocks, no, to get that to that project or to do that particular project. But if the company is very certain, no, that it will be successful, hindi sila mag-i-issue ng additional shares of stocks. But instead, they will borrow money. And when the investors, no, saw this, no, saw that the company is borrowing instead of issuing shares of stocks, the perception or the signal that it will give to the prospective investors is that the company is very certain that they will be, no, successful in the project. Kaya ayaw nilang i-share yung risk sa iba. No, they will shoulder the risk because they are certain that it will be successful. So yun yung sinasabi naman ni signaling effect. No, mali pang spelling, ano? Double L yung signaling, ano? Okay, so anyway, that ends the presentation for this one class. Okay, so I will send the other PowerPoint presentations, no, done by the or agreed by the done by the faculty kasi may toka-toka rin kami. So this is my own PowerPoint presentation. But if you want, no, you can use also the other one that I will be sending. Pero pareho naman halos no? Pareho naman halos. Kasi ito PowerPoint ko na last time, no? Mga previous years pa. Tapos nag-update na lang ako, no? Update na lang. And then I will give the problems with the solutions by Thursday siguro. But can someone please remind me kasi minsan nakakalimutan ko sa totoo lang, no? Can you please remind me by Thursday kung wala pa? Can you please remind me to upload, no, the problems and including this video recording? Okay, by Thursday kung wala pa,
Okay lang, sir, if through text.
Okay lang sa akin. Basta ma-remind lang ako kasi alam niyo nakakalimutan ko yan tulad nito, no, yung synchronous natin. Naalala ko na lang after, no, kahapon. Sabi ko ba hindi pa pala ako nakapagbigay ng link. O kasi nga itong PowerPoint na binigay sa amin ng faculty naman na gumawa was sent to us ng Sunday night. And medyo busy ako kahapon kaya late ko na rin nakita. Pero meron man ako kasing PowerPoint talaga. So that's why I use this pa rin, no? Pero pareho lang naman yung presentation namin, no? Ibig sabihin yung content siguro mga 95% pareho kami. But I will be sending that also para you can use that as an additional material. And then I will send the problem with the solutions kasi yun ang gusto nyo. Then by Thursday nga, asynchronous tayo lalabas. And then we will meet on Tuesday for the synchronous again, for the discussion of the problems. Okay ba yan?
Yes po.
Para mapahinga din kayo. Kasi tapos naman na tayo ha? Unless otherwise, no, biglang babaguhin na idadagdag yung money market. Pagka dinagdag yung money market, ay wala tayong choice but to have a synchronous again on Thursday, no? Total mag-ano naman ako. So titingnan niyo yung announcement ko if there will be a synchronous. Pero based on the kasi nagtatanong ng consensus ngayon regarding that quiz if we will include the money market. Okay, so ganun siya. So if there is no money market, so ibig sabihin nun, asynchronous tayo, but remind me of the uploading, kasi gagawin ko pa rin siya. Okay?
Okay po. Noted.
Okay, so we will end here kasi masakit na yung lalamunan ko, no? 3 hours ako halos, more than 3 hours ako straight nagsasalita. So para makapahinga na rin ako. Okay? Kayo rin, no? I'm sure na napagod din kayo dyan. Kahit na nakikinig lang, nakakapagod din, no? So anyway, I'll start first the recording pala.